Hello, everyone. I hope your day is good to you. I hope your week is good to you, great to you. I hope many opportunities and blessings have been headed your way. We are back with another video today. For those who do not know me, my name is Ramira, aka, oh my gosh, I should have came on camera. Maybe I could come on camera if it's not too late. Hello, you guys get to see my pretty face today. um, so for those who do not know me, my name is Ramira, aka Mara the Goddess. A little bit about myself. I'm 29 years old, stay-at-home mom to three wonderful boys, and I rob banks legally. And I'm here to teach you how. Um, if this is your first time watching, I definitely want to welcome you to my channel. Thank you so much for tuning in. But I have to let you know, you have started this video path on the wrong path. I need you to go to the previous videos, back to the basics. That's the first one, where we're talking about the Candlestick Bible and how I teach it and how I trade. So far we have did a lot of content. Introduction, history of the candlesticks. What is a candlestick? The candlesticks and the psychology behind it, market structure, time frames, and trading strategies and tactics. So you are a little bit behind, but no worries. You're actually not that behind because you're right on path to your progress. So I need you to stop watching this video. Go back to the previous video. It should be the first one that says back to the basics when we're going through in the introduction of the candlesticks. So we're using the Candlestick Trading Bible. It's a free download. You can download it with any of your internet browsers. I've also put the link in the description below so you could be able to get the book as well via Amazon. When I first started out, I just downloaded the book. I printed it out, put it in a folder, and did my little notations, my highlights, and I studied it until I got it. And the rest is history. Now I'm here helping you learn this great information for free. So stop watching this video, go to the previous video so you can get caught up, so you can know what's going on. Please, please, please do your homework. This is not a race, okay? Take your time. And when you get here, you'll be right on time, all right? All right, for those who have already been following me, been tuning in, thank you so much for coming back and returning to the video. Today, we are going over the pin bar candlestick pattern strategies. Maybe I should have recorded this through Facebook, but you know how Facebook be hating on me sometimes. But no worries, so let's get into it. Or before I get into it, I have to give you guys my motivational quote for today that popped up. It says, give yourself some credit for the days you made it when you thought you couldn't. That is definitely personable to me because it has been times where I have lost money in the market. I have like the analysis has not was not analyzing on those times, and I just thought I was just like hopeless, like, what am I doing wrong? But in this life of trading, you will have some losses, and that's normal. Are you going to continue to suck up in the losses, or are you going to man up and go on to the next analysis on the next pair that you trade and get it all back? Okay, we're not gonna be stuck in the place. So be grateful how far you made it, especially times when you thought you couldn't make it. Definitely all great praise goes to God because he know where I'm at. So all right, so let's do it. The pin bar candlestick pattern strategy. So the pin bar candlestick is one of the most famous Japanese candlesticks. It is widely used by price action traders to determine reversal points in the market. In this section, you will learn in detail how to identify potential pin bar signals and the conditions needed for high probability setups. A pin bar is a chart candlestick A pin bar is a chart candlestick. It is characterized by a very long tail that shows rejection that indicates that the market will move in an opposite direction. The area between the open and close is called the real body. Typically, all pin bars have a very small real body and a long shadow. So those wicks, just a shadow. A bullish pin bar is known for its lower wicks, and the bearish one is characterized by long upper wicks. The color of the candlestick is not quite important. However, bullish candlesticks with white real body are more powerful than the candles with real black body. With a real black body. On the other hand, a bearish pin bar with the black real bodies are more important than the ones with the white real bodies. See how pin bars look below. All right, so bullish pin bar, like they said, it don't matter as far as the color of the body, but it's more powerful when it has the same color in the direction that it's going. Okay. All right, and then here is our bearish pin bar. All right, so how to identify pin bar candlestick setups? To be honest, quality price action setups don't exist in the market because you will see that sometimes you can find a high probability setup, you feel very excited about it, and you take your trade with confidence. But at the end, you'll be frustrated because the signal fails for unknown reasons. That happens a couple of times because the market doesn't move doesn't move due to pin bar formations. What moves the market is the law of supply and demand. Okay, let me give you an example. If you can identify a quality pin bar candle near a support level in an uptrend, this is a powerful buying signal to take. You shouldn't ignore it. But if the amount of money that buyers put in this trade is less than the amount of money that sellers risk in the same trade, the market would not go in your predicted direction. If the signal fails, it doesn't mean that your analysis is wrong or pin bars don't work. It is just because the market didn't validate your decision. Therefore, you accept your loss and you look for another opportunity. So it's like exactly what I just said about the whatever. You may ask yourself, why should we look for quality pin bar setups if the market doesn't respect them? Okay. As you know, trading is a game of probabilities. There is no certainty. This is why you should elevate your pin bar setups from multiple angles. And the fact that you are looking for quality setups means that you are trying to put the probabilities of success in your favor, which is the right mindset of successful traders. To determine whether or not a pin bar is worth trading, the price action signal should respect the following criteria. All right, the pin bar formed in bigger time frames such as the 4-hour or daily time frame should be taken into consideration. Okay. Because if you look at the smaller time frames, you can easily spot a lot of pin bar signals. These setups should be ignored because smaller time frames generate a lot of false signals. See the illustration below. All right. It has the pin bar formed in a line which the direction of the market is more powerful than the one which is formed against a trend. If you can identify a clear trend, that means you know who is in control of the market. So, of course, in this case, it's an uptrend. The formation of the candlestick pattern, the formation of this candlestick pattern with the trend makes it so effective. See the chart below. Okay. And then we have our pin bars that's highlighted green. That's with the trend. And us know that we're buying because it's an uptrend, as we can see. And then pin bars against the trend. See? All right. It says, as you can see in the chart above, bullish pin bars that form in line with the uptrend work, and they should be taken into consideration. But the bearish ones that were formed against the trend should be ignored. The anatomy of a pin bar is important as well. You have to make sure that the candlestick is a pin bar by looking at the distance between the real body and the tail. Pin bars with longer tails are more powerful. I like that. All right, so the psychology behind the pin bar counter formation. Pin bars are formed when prices are rejected. This rejection doesn't indicate a reversal signal because the price action setup can form everywhere in your chart. The most important areas to watch when trading pin bars are major key levels such as support and resistance, supply and demand areas, and moving averages. Okay. The formation of this candlestick chart pattern in these level. Oh no. All right, so the formation of this candlestick chart pattern in these levels give a clear idea about what happens in the market. If the rejection was near support level, for example, this is an obvious indication that the bulls are more powerful and they are willing to push the market to go up. See the chart below. This is beautiful. All right. In the formation of this candlestick occurs near resistance level, it indicates that the bears reject prices and prevent the bulls from breaking this level. So this means that sellers are willing to push the market downward. See the chart below. So this is the example of an uptrend pin bar. Okay. And then here's that example of the pin bar signal in a downtrend. It says, if you understand the psychology behind this price action pattern formation, you will be able to predict what is likely to happen in the future. And you will make good trades based on high probability pin bar signals. Okay. All right. So let's just see if we can go into the chart and let's see what we gonna see. If we can find the pin bars in the charts. I'm trying to get it to where you guys can just like see these, okay? All right, so they did say guys, look at this one. And I'm going to go and put it on the other chart. But here we have that pin bar. This is my arrow. We had the hammer pin bar letting us know it was bullish. Okay. Looks like this was at a level and then she went up. So let's look at it on another EU chart. I don't want to confuse us. Even if we move it here. All right, so here's that pin bar. Normally, if y'all hear the babies, they are out of school. So back in the candlesticks, it was the hammer. We know the psychology behind the hammer. Hammer means that it's a bullish. The psychology is bullish. We have the pin bar. right? We already know it's an uptrend because we have higher highs, higher lows that's been forming, right? One it looks like this is a support level. So that's even like A1. All right. So we're in an uptrend, higher high, higher low, higher high. All right, that higher low was forming, but we have that pin bar, right? And that uptrend. And what did she do? She went up. Okay, so that's how easy it is to find a pin bar in a trend. Okay, I actually love that example. And also that body is white, indicating bullish. So that's even more no-brainer. So we're on a daily time frame. We're at a major support level. We're in an we're in an uptrend. Okay, daily time frame, uptrend, support level. We see the pin bar and the color is the bullish, and she goes up just like that. That's how, once you train your eyes, that's how easy you could be able to identify it, see the other technical tools around it to see if it actually fits your analysis, and you take the trade. All right, so trading the pin bar candlestick with the trend. If you are a beginner trader, I highly recommend you stick with the trend because pin bars that occur in trending markets offer good trading opportunities with high risk to reward ratio. When you master trading it with the rand or maybe trend, you can then move the trade range bound. Okay, you can then move to trade range bound markets or even counter trends. So once you master it. All right, this strategy is simple. You start by identifying a clear uptrend or downtrend. Okay. You wait for a pin bar to occur after a pullback to a support or resistance level. All right, see the example below. Looks like it's been in a downtrend. It broke, retracement. So it says pin bars to occur after a pullback to support or resistance level. So it pulled back to that resistance level, pin bars form. In this case, since we're looking for the sales, we want that pin bar to be shooting down, and she shot down. So it says the figure below shows how this price action signal works if it is traded with the trend. As you can see, the price was rejected from the resistance level, which indicates that the bears are still in charge of the downtrend. The formation of the pin bar indicates the end of the retracement move and the beginning of an impulsive move at the resistance level in line with the downtrend. This is a high quality setup because all of the following criteria are respected. The pin bar is well formed and it's in line with the direction of the market. The rejection occurred at a major key level, which represents a hot point in the market. In this case, it was that resistance level. And then the risk to reward ratio is good and is worth trading. Sometimes, even if the market is trending, we can't draw support and resistance levels because price moves in a certain way, which we can't spot static key levels. If you are in the situation, you can use the 21 moving average, which will act as a dynamic support in an uptrend market and a dynamic resistance in a downtrend market. See the illustration below. Okay. All right. There's that illustration. It says, as you can see in the chart above, the market was trending down. Using the 21 moving averages helps us to identify dynamic resistance levels and high probability pin bar setups. See another chart below. All right, this is an uptrend. They have that 21 moving average and the pin bar signal. All right, the 4-hour chart above illustrates how the 21 moving average can help us find key points in the market. When price approaches the moving average, the buying pressure takes place in the market and the price goes up. The pin bar signal is clear on the chart because the trend is bullish. The price action setup has a bullish anatomy as well, and the rejection from the 21 moving average is a confirmation signal to buy the market. All right, so we haven't talked about moving averages. This is our first time talking about moving averages. What the hell is this moving averages, and how do I get it? I don't know, fear guys. So you're gonna be in TradingView. And I think I should start teaching on the MetaTrader desktop app because I know with all the changes that's going on, I think I may start doing it. But I want you guys to see this was the original. This is where you can see all the candlesticks more clearly versus that MetaTrader. That's a whole nother software. That's a whole nother game. Okay? Not game, but yeah. All right, so how to get this 21 moving average? We're going to go to indicators. It's going to be on the top toolbar inside of your trading view. Says indicators. Okay. Once you go to indicators, you want to search moving average. Okay. You'll see a lot of different moving averages that may pop up. Just choose the simple moving average. Okay. We are not going to make this complicated. I don't know about the ribbon. I don't know about all those other people and who they are. Let's make it simple. All right. Now we need to change this to 21 because in the candlestick pattern, in the candlestick Bible, it says to use the 21 moving average. All right. So how you do that? So once you click on indicators, it's going to that 21 moving average is going to pop up on the left hand side, right up under your pair that you're trading. Under the ask and buy price, it's going to be the simple moving average, SMA. You're going to click on that settings button. When you hover over it, hover, oh my gosh. Here you go over it, go to settings. All right, and that length, change it to 21. That's all you have to do. Now, if you want to change, like, see that 21 moving average is a little bit skinny, a little bit light on my chart. So you can always change the thickness of it. And you can also change the color of it. I'm just going to change it to this. All right. And let me see if I can hide. Yes, great. So, okay, we know that this is an uptrend. That 21 moving average is letting us know we are in that uptrend. Look at this. That pin bar is close to our 21 moving average. That's close to our support level as well that we already identified. And what the heck? Boom. All right. She went up. And I don't know what's going on with this question at this current moment. I'm not reading that right now. What we identified was the uptrend. We seen that pin bar near a support level and also with that 21 moving average. Boom. So she broke. She came back. She pulled back. And this is the pullback. I know she had these couple of candles right here, but the pullback did take place. Pin bar was formed. We could have got in even at the next candle, we could have got in, and then we still could have been able to profit. Let me see. And then even here on this downtrend, right? We have a downtrend. Here is that pin bar near that resistance level. It's a resistance level that's right here. And it literally touched the 21 moving average. That's even better. Like they said, the color does not matter, but the direction of the trend and the candlestick is what you really want to focus on. But it's more profitable if it is going in this, if the color is going in the same direction. In this case, the color is not like a black because it's supposed to be selling, but it does have a long rejection from the resistance level. She also came back and pulled back. That's that pullback that took place. And then she did sell. That's how you could be able to identify it. I know I need to probably turn these on, but I want to give us like a clear chart so you can see. Yes, this is a clear chart. And then we're just gonna I'm just gonna circle what I was talking about. So we have that pin bar. Not a shooting sign. I want to make this more of a red color. All right, let's just keep it like this. All right. Downtrend, came back and pulled back, formed and happened. Pin bar formed and happened. We're under the 21 moving average in this case because we are selling. So it's going to be under the 21 moving average. It touched the 21 average. That's wonderful. And she sold down. Then coming along, we now know we have an uptrend that is taking place. Okay. Uptrend has happened. The pin bar has formed. Pin bar has formed, right? In this uptrend, we are above the 21 moving average, and we are at that support. It's a support level that's right here, and then she moved up. So that's how you can be able to identify the pin bar. That's how you can be able to trade the pin bar in either size of the trending market, going down or going upward. That's why they say it's best to learn this with the trend first before you start going over and going to the range bound markets and going to a counter trend. That's going to overcomplicate you. Keep it simple. 21 moving average goes to simple moving average. Change your length to 21. You can change your thickness and the color of the 21 moving average if you want to. Identify if it's an uptrend or a downtrend. Find that pin bar after the pullback of the support or resistance level and trade it. Take the damn signal. All right. So but now we're not gonna go into like the trading tactics. I'm gonna leave that for the next videos and things because it talks about like the stop loss and actually how to get that risk to reward ratio going on. So that's a little bit complex, but I want us to at least know how we can identify it, what technical tools that we can be able to use, support and resistance, supply and demand. And then we got the 21 moving averages. We know it has to be in an uptrend or a downtrend. We're not talking about range bound markets. We're not talking about counter trends. And yeah, that is good. So that's all that I have for you guys. I didn't want it to be too long, but I know this had a lot of great information in it. Go on your charts, train your eyes, find those pin bars. It does not matter which tool that you use, which pair that you use, you can be able to still find it. In this case, this was a EU. This one was a USD Swiss franc. We had another one. What did they use? Gold. Okay. They didn't have the time frame for that. Pair for that. They didn't have a pair for that. But yeah, that's how you can find it. Look, this is AUD, NZD, CAD, Swiss franc. It don't matter the pair. I don't think y'all heard that. It doesn't matter the pair. Look at those candlesticks. Know the psychology behind it. Trade it with your technical tools. Be profitable. Like they said, you won't win all of them, but if you have the right technical tools that match your analysis, confluences, take the damn signal. If it lose, it's just that the market didn't validate. Look at those 4 hours or the daily time frame when you're looking at the pin bars as well. All right. Do your homework, study. I'll be back when we're talking about the trading tactics. And let's see if we're going to talk about the other section. So with the trading tactics, I think I'll just touch on trading tactics and trading pin bars with confluence. And then the next videos will be the examples and then talking about how to trade pin bars in the range bound market. Okay. And we start getting on more to the, y'all know I love my babies, the engulfing bars. But yeah, we almost there, guys. We are almost there. I know we can do it. You guys have a great one. Do your homework. Make sure that you like, subscribe, and share. Make sure that you're following on me on all of your social media platforms, which is Merida Goddess 22, MARTHEGODESS, two number twos. Yes, I know it's only one D. That's how I want it to be. And then also, if you haven't joined our Facebook group, the Goddess Tribe, make sure that you join the Facebook group, the Goddess Tribe. It's a purple, it's like a purple like display color that says the Goddess Tribe. Find that, follow that, keep up with the stats. I will see you next time. Later.